Short exercise 3-11, adjusting for interest owed at the end of the month. So Resort Travel borrowed $33,000 on September 1st, 2024 by signing a 1-year 6% note payable to State One Bank. Calculate the amount of interest expense to accrue as of the end of that year. So the way notes payable work is you do not pay the interest until the note matures. When will this note mature? 1 year from September 1st. However, it's now the end of the year, and we need to show, because we're going to do our financial statements, we need to show how much interest we owe. So calculate the amount of interest to accrue from September 1 to December 31st. And then we're going to record the adjusting entry to accrue interest expense as of the end of the year. Remember, accrue just means something is accumulated but has not yet been paid. The thing that's accumulated is interest. And then we're going to post to the T accounts. So requirement 1, calculate the amount of interest expense to accrue at the end of the year. So we need to input the formula here. So remember, the formula is principal times interest rate times time. And the principal is $33,000. In other words, the principal is either the loan amount, or in this case, it's the note amount, which is basically a loan. So we're going to enter 33,000 times interest. The interest is 6%. So to convert that to a decimal, take 6 divided by 100. It becomes 0.06. So I can't remember, did I hit times? Times 0.06 equals. So that's how much interest per year. But how much time has gone by from September 1 to the end of December? That's September, October, November, December. So 4 months. So we multiply times 4 months divided by 12 months. Because basically we're saying it's 4 months out of 12 that we're accruing the interest. So that gives us a total of $660 of interest that the company owes at the end of the year. Requirement 2, record the adjusting entry to accrue interest expense at the end of the year. So in other words, how much interest do we owe? I'm going to copy and paste the 660. And what's happening is, whenever we owe interest, we have also accrued interest, so that's interest expense. And which way is this interest expense going? Remember, at this point of our accounting learning, expenses only go up. And how do expenses go up? With a debit. And since we owe the interest, the other account is interest payable. Do we owe more or do we owe less? We owe more. And interest payable is a liability, so how do liabilities increase? With a credit. Then we need an explanation to accrue interest expense. Now it's not the last one. It's not to record the payment. Notice cash is not involved. We're not paying interest. Interest is not going to be paid until September 1 of the next year. That's how notes payable work. And then it says, post the adjusting entry to the T account, so the two accounts affected by the adjustments. Okay. So when you're posting, you're just going to take the first one. Interest expense is a $660 debit. So I'm going to debit that. And when was it debited? On December 31st. And then the next one is interest payable, $660 on the right side, December 31st. And then what's our new balance? Balance always goes on the bigger side. So as of the end of the year, they owe $660 of interest. And that's it.